Highs for technology today. Amazon and Alphabet hitting lifetime highs, and shares of Microsoft are at a 16.5-year high. The gains propelling the NASDAQ to a new record close. Let's bring in today's panel. Scott Martin from Kingsview Asset Management. He's a Fox News contributor. Jack Howe is here from Barron's. Jack, I don't want to pick out the bad performing from all of that good news, but it's interesting. I mean, it's masking what's happened to Apple. Apple isn't keeping up with these other tech stocks we're talking about.
Definitely not, and it trades much more cheaply relative to earnings and cash flows. These dot-com stocks, not only have they done very well, but it's hard for some of them to argue that they're expensive at these prices. I mean, Google, as big as it is, its growth looks to be accelerating right now. If these stocks all hit their price targets on Wall Street over the course of the next year, we're going to have an S&P 500. We're going to have a U.S. stock market with the 5 biggest companies. We're going to push out Exxon. We're going to push out Berkshire Hathaway. The 5 biggest companies are going to be tech. 3 of them are going to be .com. The other 2 are going to be part .com. Everyone's going to become a .com investor, even if they're index investors.
Yeah. So, Scott, I mean, what does that tell you? Does that tell you tech's the future, or does it scare you that we're kind of piling into one area? Does it make you feel like it's bubblicious?
Well, I always feel a little scared and bubblicious, but Jack's actually right. You know, this is a new growth environment where stocks like Apple are not really growth stocks anymore, not, say, your father's growth stocks, and therefore investors, frankly, are not interested in them. Look what's happened to Facebook over the last couple years. It's absolutely exploded. So you're seeing those areas really take over for the market, which, granted, I think is good, because that's what the future economy is all about, not so much about the industrials and some of the cyclicals of days past.
Jack, when you see stocks like Amazon and Alphabet at an all-time high, I mean, do you feel like, would you add to them at this level? I mean, you're not in the business of recommending individual stocks, but you said you feel like they could go up from here, that they're not actually that expensive.
Alphabet, I feel, is a tremendous performer and reasonably priced, even at this price. Now, Amazon has a lower profit base. We're all expecting those profits to move higher. Every time I say Amazon is too expensive, I get quickly kicked in the behind by the stock. I'm out of the business of saying Amazon is too pricey.
Okay.
I mean, the cash flows look likely to mount quickly in coming years.
All right, moving from tech to retailing stocks, Coach is showing signs of a turnaround. The luxury handbag maker reversing sharp declines in sales with better than expected growth in the fourth quarter, but Coach also releasing full-year guidance, sending the stock about 2% lower on the day. Scott, the management has been very proud of what they've done with Coach. They've cut costs. They improved the brand. The brand quality had been slipping. They improved that to make it on the high end. But it's still a retail stock. It seems that no matter what you do with retail, you're going to lose.
Yeah, you are, David, and that's because the consumer is just so good. The consumer is caught up to, I think, what a lot of the retail names did over the years, which was, frankly, hit them hard with high prices and maybe not so great goods. So anything retail today is really tough to buy, aside from, say, what we just talked about, our good old darling stock, I think, of the day or the year, which is Amazon.
Yeah, well, Jack, talking about Amazon, I mean, the online sales department of Coach have not been very good. They've improved the brand. That's great. They've cut costs. That's also good. But their online sales have not been so hot. I'm wondering if it's possible with Amazon around if you can improve online sales.
Fashion, apparel is one of the is the next big thing for Amazon to go into. We've already seen, the sporting goods guys get killed, all kinds of retailers get killed. Some of Amazon's fastest growth right now is in apparel, so those guys should be scared. And a company like Coach, there's a lot of outlet stores, more so than the full price stores. They've trained people to look for discounts. So I'm hopeful, but I'm not terribly optimistic for the stock.
Shares of Delta lower today. The airline is still trying to rebound from a major computer outage. Delta canceling 630 more flights today. Wow. They also announced they will provide travel vouchers worth $200 to all customers who are experiencing at least 3 hours of delays or cancellations over the past 2 days. Scott Martin, what does $200 buy you in the airline world? I mean, give me a break.
It buys you another chance to miss your flight or get it canceled, really, which is a tough thing these airlines are facing. This has been a pretty stormy summer, so a lot of airline delays. I've been through them myself. I've really been mounting up. But I'll tell you what, I think in fairness, some of these airlines, if you look at Delta, if you look at JetBlue, have been unfairly punished over the last year or 2 years. So we've actually picked up some Delta a little bit lower here, just because I believe going forward with fuel prices down, Melissa, and the fact that they hit you in your wallet with everything you do on board those planes nowadays, that's good for their profit margins.
Yeah, Jack, I mean, it's super annoying, but what choice do you have? You know, I mean, every time I go to book something, you're going on a trip, they're filled at capacity. If you don't buy right away, the seats are gone. It seems like even though the service is terrible, unless you can fly Trump Air or unless you're the Clintons and you have the giant planes, you know, if you're like all the rest of us schlubs, you got to buy the tickets anyway.
Oh, come on. There's choice now. There are exactly 4 choices among big air carriers, and that's down from dozens, you know, if you go back a couple of decades. So the pricing power is really there for these guys. You know, this stings for Delta, especially because it has a reputation for being the most reliable, and they get a lot of business traffic off that. This is going to sting in the short term. But the stock is 6 times earnings. What do you want? What's left to lose? This stock doesn't have any respect to begin with.
Yeah. Scott, I mean, people talk about the hit to the brand because, of course, we're saying Delta over and over again. They're getting a lot of publicity for this. But it's happened to all of them. I mean, it's happened to Southwest. It's happened to each of the airlines that they've had this sort of computer outage. Do you think that their brand takes a hit?
No, I mean, I think it might for a couple of days, and I think that's an opportunity if you're trying to get long some of these names, and maybe you've missed a recent upside appreciation, because I think Jack's right. I mean, it's kind of a necessary evil. You're going to get some slowdowns and some delays, but the reality is these airlines have a monopoly to some degree amongst the 4 of them, and therefore their probably profits are going to be pretty safe.
All right, guys, thank you so much. See you later.
Well, Disney